Good morning and welcome. Patriot Radio News Hour. Joe and Jason, happy Monday. Well, those words don't go together. It's happy and Monday. Nothing happy about being back from the weekend. I hope you had a great weekend. March, no madness. Did you see all the number one seeds in the men's basketball tournament are in the Final Four? I don't remember last time that happened. Yeah, apparently not a lot of madness. Matter of fact, the only madness probably in the gold and silver markets. And, of course, do I need to say it again? And they do. All-time record high gold, well above 3,100. Yeah, get ready. We're going to say that a lot. And believe me, any gold starting with a 3, it's going to be cheap. Just saying. Going to be really cheap, especially with what has been happening all over the world. The Black Rock, Larry Fink, he was out on TV today and talking about protectionism is back. And, of course, Liberation Day tomorrow. I don't think the markets are going to hear what they want to hear from President Trump, because I think what we're going to get a whole bunch of more tariffs, and then I think we're going to get, oh, by the way, there's probably more tariffs coming. I think that's going to be the word of the day tomorrow, and then over the weekend, Donald Trump letting everybody know that he's not happy with Vladimir Putin and saying, I guess I'm going to have to start tariffing the oil. He hasn't announced it that they've done it yet, but he is threatening now to impose 25% tariffs on Russian oil, and even went as far as saying, if anyone buys Russian oil, they can't do business with America. I mean, wow, yeah, there's, Jason, so much going on in this, and, protectionism, a word that we haven't heard for a very long time. Of course, we got a big week this week, a lot of data. It's jobs week all week, so we'll get like the JOLTS, the private sector payrolls, jobless claims, and then, of course, on Friday, the government payroll numbers, and every day after today, we just get a bevy of economic data, construction spending, PMI, right? So it's going to be a heavy data week, and I'll just say this. I feel like gold goes up no matter what the data is going to say. Either if the jobs are really bad, good for gold. If the jobs are really good for gold. I don't know about Wall Street. Wall Street is, I think, a lot of people starting to get worried about what the returns are going to look like. They've downgraded GDP now. GDP for the first quarter down to 0.3%. So this started in the low 2s, then it went to 1.6. Now they're saying 0.3%, and a lot. We talked about all these banks raising all their gold forecasts. I bet you like another half a dozen got to do it again this week because gold's already broken 3,100. But Jason, a lot of companies now lowering Wall Street and lowering it by a lot. Talk of Goldman Sachs. Forget about S&P 6,600. We're looking for possibly an S&P with a 4 handle on it. And right now the S&P is about 5,500. But we're starting to see everyone reining in the returns on Wall Street and kind of saying, okay, it's going to get tougher from here.
Yeah, some of the largest holders of stock have been getting out for the last couple of years. So I think some of the next larger fish are starting to look around, and that's what's causing, I think, the stocks to start to slide a little bit. And we had gold up tremendously on Friday, now up again on Monday. This is starting to look like last year. So 3,200 gold.
It's a pattern
maybe.
that, right?
Yeah, 3,200 gold Friday or next Monday. We got 32. We could see 3,200 gold by this coming weekend. And if we have another up day on Friday and Monday next week, then we might be looking at 3,300 gold the next week. This is what happened last year when people were frustrated. I wish I would have bought early in the year. Well, it's happening again. So if you want to get it before it takes a huge leg up, this would probably be a good day to start doing it, Joe, because it's not waiting around for you to figure out if you want to buy it or not.
Yeah, it really it's been on this incredible run here over the last, 15 months or so. And once again, I think it's kind of saying, hey, we just don't have confidence, right? That's really what the world is saying. Jason was talking about, so we know, Warren Buffett and Bezos and Zuckerberg and Musk, right? These guys were all selling last year. But now we're seeing the hedge funds really starting to unwind a lot of the tech positions, and really the only one left, it seems like, the only one not selling is the retail guys, right? They believe me, don't worry, they'll put your 401k and your IRA money to work, whether it should be or not. But it continues to appear that they're viewing this as a no confidence and not just, listen, it's not just the U.S. We got a global debt problem, and we got war drums, and now I guess we'll call it protectionism back in the world. Patriot Radio News Hour, Joe and Jason will be back right after the break. 800-951-0592. That is our toll-free number. Obviously, the physical delivery. We like to call it wealth insurance, gold and silver. It's what we do. We've been doing this for 29 years. AllAmericanGold.com is the website. Let's take a quick look in here at the markets. Right now, the Dow is up 25 points. I don't know that it's going to continue. I think there must be a stock in there that's doing something, because the S&P is down 42, the Nasdaq's down 300. So we'll see here as to how the Dow ends up. The 10-year note, 423. We had several bad auctions again last week. The good news is they're lowering GDP. So that is something where, right, they're it's called, so you got two types of inflation that are, I guess, bad types of inflation. Because somehow they convinced us that 2% inflation somehow is okay. I don't know how that happened, but they said, 2% is fine. Just understand, what does inflation mean? Most people just say, well, stuff costs more. It's not, no. I mean, yes, that's one of the effects of inflation. But really, the word should be devaluation. That should be the word, right? What does that mean? It just means the amount of stuff I can buy becomes less with the amount of money that I make, right? What I could buy for $100 20 years ago, right? It's not, but doesn't it feel like it's like $1,000 now? I mean, 20 years ago, $100 at Walmart, the cart was overflowing. Now it's like it's $100. Like, what the heck did I buy? There's nothing in here, right? I mean, that's what it is. It's the devaluing of your money. Having money in your bank accounts right now, so foolish, just incredibly foolish, because you know what's coming, right? We know the tariffs are coming. We know inflation's getting, look at the inflation already for February. It's getting worse again. And this time around, the Fed's not going to do anything. They're not. If anything, they may even cut and make it worse. Crude oil. Talked about Russia already. Guess what? Well, almost up $2. I hope not. That would be a game changer if that ends up coming to fruition. That not being able to get peace in Ukraine, and Donald Trump decides to sanction Russian oil. I mean, he's already sanctioned Venezuelan oil. Now we sanction Iranian oil. You sanction the Russian oil. Okay, that's the game changer, right? You can sanction Venezuela. Okay, you can. Okay, it's 500,000 barrels a day. It's not the end of the world. Iran, okay, now it gets a little trickier, right? A little trickier. But when you talk about Russia, that's it, right? Forget it, right? We'll be talking about, are we going to be at $100 a barrel? That will be the talk, right? So we'll wait and see on that. Right now, gold is up $39, $31.26. Right now is the spot gold price. Silver sitting in, we'll see what silver's doing. So they tried to whack the snot out of silver today, right? We know how manipulated it is. Right now, silver's down 17 cents. 33.90. We'll continue to watch. Listen, silver's setting itself up. I know it sucks. It's just easy to manipulate. How do they get away with it? Well, silver's not a very big market. Just understand that. They don't need a ton of money to manipulate it, right? The problem with gold, it's too much money. It's a much bigger market, and they can't do it. By the way, ETF inflows into the gold market roaring again. So this was something, remember last year when gold was doing what it was doing last year? And they kept talking about, well, the ETFs, they're still selling. And they were selling a lot of gold last year. Tons and tons and tons of it. And look at what the gold price did last year. Right? We essentially went from $2,000 to $2,700. Now look at this year. What's different this year than last year? Well, let's see. Central bank gold, oh, no, wait, they're still buying. China just announced again, yep, they bought more gold. They don't care about $3,000. I told you guys that a week ago. They don't care. $3,000 is not a high price. That was always the thing. Oh, well, gold will get too expensive. People will stop buying it. Now, we have things where in a single day, forget about a month, but in a single day, you have ETFs adding 20 and 30 metric tons in a single day. Matter of fact, one of the days in March, I want to say it was close to a record amount of inflow as we're looking at what's happening. You got to remember, too, China, they just started their gold ETF. It's new there in China. But when we're looking at ETF inflows, 23 tons of gold on March 21st, the biggest one-day increase going back 3 years. And over the first quarter of 2025, the gold ETFs added 152 tons. So what's different from last year to this year? Well, last year, they sold 150 tons. This year, they're buying 150 tons. And Jason, last year we were in an environment where You know, they kept telling us inflation was going down last year. And now, think about this. We've got big bank demand, central bank gold demand. We got ETF demand. We've got inflation coming back. We've got a Fed that is stuck, right, because they've got no good choices. And now, of course, obviously protectionism. And, you know, we're going to go out and sanction everybody, it feels like. No wonder why gold's doing what it's doing right now.
And for silver, you really shouldn't be too unhappy with where it is. I was looking, you know, last year we got to just under $35. So we're at 34. So we're not at record highs. I would say 35 is record high gold because, Joe, if you're looking back, you know, we had the two spikes in silver, 2011 and 1980. If you look at all the years around it, there is no silver high price for any year above $34. So last year at $34.75, which hit that record high briefly at the end of the year, and now we're flirting with higher than $34 right now and moving upwards. Silver's up. It was opened the year about $23.75, ended about $28.75, so it went up $5 an ounce last year. We're already up $5 an ounce from just under $39 to we're at $34, so we're just a little over $5 an ounce this year with plenty of runway left in this year. So really, Joe, silver technically is sitting there at record highs. I mean, yeah. You just take out the spikes.
What's Jason talking about? How can Jason be saying record highs when we know silver's been $50 twice? What he's saying is in both of those years and all the other years, the average price of silver for the year was considerably less. Right, so yeah, it may have hit 50, but the silver price may have only averaged $25 for the whole year. In other words, it was kind of like a rocket shot up, and just like a rocket, what happened? Well, the rocket comes crashing back down. This is much different, right? Silver last year averaged $5 an ounce more than the year before. And so far this year, right, it's another $5 and going higher. So this is a much different setup when we look at the silver price. Why is it different this time? Put it this way. We're not going to get another one of these rocket shots in silver where, okay, it went to 50 and then it comes right back down.
Unless there's
by the time it goes to 50, by the time the year's over, it's at $18. That's not happening this time.
Unless there's a complete collapse of supply. If there's a complete collapse of supply, then you might get a race, right, Joe?
Right, yeah. I mean, complete collapse of demand, I guess, would be, it would be the only way to do it. But, again, we're not there. I think this is why a lot of people are like, this silver rally is a lot different than previous rallies. And then when we look at the consumer, right, why over the weekend, I mean, gosh, it was like, it was Goldman, was it, I don't know, UBS, maybe Schwab, Raymond James, there was a bunch of them just knocking the hell out of their Wall Street projections. And, of course, we got the new GDP forecast, right? 0.3 is what they're expecting in the first quarter. You know, we were doing 2.5 to 3, so that's a big difference. But Vanguard, right? They're the largest, 401ks. Well over half the people. I want to say it's like 60% of the people that have a 401k with a company, it's Vanguard. Right, so why Jason, Vanguard's one of the evil empire people because they own stock in everything, and a lot of times, right, they're if they're not the majority holder, they're right next to it, right? You know, they have a lot of influence. They said that after looking at the data, they said that 5% of all account holders took hardship withdrawals in 2024. By the way, in 2023, 3.5% took the withdrawal. So now we're like, okay, we're almost up to 10%, and why do I get the feeling by the time 2025 is over, we're going to be a lot higher than that? Jason, when you're talking about 1 out of every 10, 1 out of every 8, is that where we're going to be? 401k holders has to take hardship withdrawals. That's a clear indication. Obviously, number one, right, they're strapped for money. But number two, that is a good indicator that there's going to be less money available to prop up the stock market.
And, I was listening to that. How much money are they going to have to prop in the stock market? And is anybody that really propping it up want to have their money there, right, Joe? Let's see how much money actually stays in the market to keep it propped up, because it seems like it should have already crashed, right, Joe? Doesn't it seem like it should already have crashed? I've seen some wild numbers, Joe, about our markets. I don't think it's easy to gauge how our markets are doing. I heard that 49% of all consumer spending is by the top 10%, which means the spending by the other 50% of the spending is the bottom 90% of America. The vast majority of Americans are only doing half of the consumer spending. What if those that are really rich at the top decide to stop spending, Joe?
Oh, boy. 800-951-0592. Friday, we were selling rolls of Walker half dollars. We had 100 rolls of Walker half dollars Friday. I've got 20 rolls left. So if you want to pick up the Walker rolls, now remember the Walker half dollars, they were the earliest, right? The 1900, the teens, all into the 20s through the Great Depression, right up to essentially right before we got involved in World War II into the 40s. And then the rolls of Mercury dimes. So a $5 roll of Mercury dimes, right? The same thing, right? These were the older dimes at $135. We had 200 rolls of Mercury dimes. So we're down to 60 rolls of Mercury dimes. They're at $135. We've got 20 rolls of the Walker half dollars, right? Everybody else charges way more for this stuff, right? They go through the bags, they pick them all out, and just leave you with the recent stuff. We've never done that. It's just too much of a hassle. But someone did these for us, right? So, okay. And guess what we're going to do? We're going to lower the price, right? We're not going to raise the price. We lowered the price. And then on $20 gold pieces, I told you Friday, warned you. So here's what I'm going to do today. We got one more day, but today, any amount, $31.95. Right now, a $20 gold piece of Liberty or St. Gaudens is $32.55. By the way, I have a mix. I do have Saints. I do have Libs. You want 1, you want 10, you want 20. $31.95, and I hate to say it, but Jason's probably not wrong here. Put it this way, there's a good chance that gold's 3,200 before the end of the week. There's a good chance, or say by this time Monday, depending on how the data comes out this week. This wouldn't be far-fetched. Right, that's the thing that we're looking at right now. When we look at what gold's done, right? Especially in these latest rallies, it normally doesn't hang out very long, and will skip $100 increments all the time. That's kind of what we're facing here. So you got 3 good options: rolls of Walker half dollars at $270. Rolls of Mercury dimes at $135, and then $20 gold pieces, $31.95 at $800. 951-0592. Now, last night, Donald Trump was talking tariffs, and he was on Air Force One. They were questioning him. Would you start with all countries? We'll see what happens. There are many countries. There is not a cutoff for these tariffs, and Trump pushed back when reporters said that the tariffs were only going to be 10 or 15 trading partners. Donald Trump said, who told you 10 or 15 countries? You didn't hear that from me. Here's what we expect. How's that? In effect right now, we know we've got a 25% tariff for any non-USMCA, right? That's the United States, Mexico, Canada agreement. 25%, right? So half the stuff we import from Mexico isn't part of USMCA. That's already in effect. 38% from Canada. That's already in effect. We anticipate that come Wednesday morning, all of the stuff, it doesn't matter if they were part of USMCA or not, are now going to go to 25%. We have a 10% tariff on Canadian energy. What we do know, that's already in existence, starting Wednesday, a 25% tariff on all imports from any country buying Venezuelan oil. Okay, so we know that's going to go into effect. Then you got to throw in now Trump's starting to talk about Russia again. We'll see. We have a 25% tariff on steel and aluminum. What we know on Wednesday, 25% tariff on all autos that are imported into the United States. We know there's a 20% tariff on all Chinese imports. What is coming on May 2nd, a 25% tariff on all auto parts. Okay? So those are already done. The question is, what else is going to be included? I know Scott Bessent, the Treasury Secretary, had singled out what they call the Dirty 15, which we, by the way, that's a lot of our imports, a lot of them in Europe, as to, we don't know the amounts of the reciprocal tariffs, but Donald Trump yesterday kind of shot down, hey, we're not just going to do 10 or 15 countries. We're going to be possibly doing all countries or a lot more countries. And it's one of those things where, Jason, and again, I feel like we're going to get these announcements. We're probably going to get, and there's more coming, and he'll probably delay some of the ones that he announces.
Yeah, you were talking about earlier about sanctions on Russia because, things aren't going the way, Trump wants them to go. I'm starting to wonder, is there a difference between a tariff and a sanction? How far off are those things really when you come down? I know a sanction is meant to block something, but really it's some of these lines are getting blurred, Joe. It's just all sounds like more expensive everything, doesn't it? Sanction, tariff, inflation, taxes. Sure just sounds like more expensive everything, and they're just using as many terms as they can to get the average American confused.
Well, and again, now we got another word. Larry Fink, BlackRock, protectionism. Now the new word of the day, which leads me to think a lot of these countries, Donald Trump so far has been bullying them not to raise tariffs. Larry Fink's comments have me worried. Are we going to be in a situation where, okay, now it's just a full-blown trade war. We'll be back after the break. 800-951-0592. Patriot Radio News Hour. Joe and Jason here on this Monday. It's a new record high in gold, 31.25. It's been as high as almost 31.30, 31.28. We've got a limited amount of Walker half dollars. So these Walkers, that I'll be honest with you, they're never the prettiest things. Like the Walkers are always the ones that are the most worn out. But they told us, listen, all these dates are legible, and it's kind of cool to see what you'll see stuff from the 30s, 1916, 1917, right? The roaring 20s, and you get all of those really interesting dates in there when you're talking about the Walker rolls. We have less than 20 still available at $270. We've got 50 rolls of the Mercury dimes. And those tend to be in pretty good shape for whatever reason. I don't know why, but the half dollars, they took a beating, Jason. They really did. I think that must have just been something where 50 cents got you a lot of stuff, and it was used quite a bit. Then you got rolls of Mercury dimes at 135, and then on the gold side, think about it. Gold's jumped another $100. Last week we were selling, 20s at $30.95. Well, today I've got $31.95. But this is, and I know it's Monday, it sucks. But this is probably the last opportunity below 3,100. As long as gold keeps going the way we think it's going to be going, especially, this is a big week, right? It's jobs data's week. I don't know that anyone thinks the jobs number are going to be anything spectacular. And if we end up getting a low number, Jason, I anticipate another strong rally, because that will give Wall Street some fuel, saying, okay, see, the Fed can cut rates.
Well, that's what the market's going to kind of want, right, Joe? They want that.
I think they need it, right?
They want that printing.
If they don't get a rate cut, there's going to be a problem.
And besides rate cuts, it's all about printing. It's about more. Yeah. It's the drug, right? It's the drug of choice, and everybody's hooked on it. And very scary what's going on worldwide, and trying to wrap my head around the digital currencies, and not even just central bank digital currencies, what stable coins may mean in the transfer of wealth through property, pumping up. Maybe Elon Musk and seeing that it's possible they're going to pump up digital currencies to levels that are ridiculous, so they can buy real things with a fake thing.
Stable coins, especially the stable coins, they buy a lot of treasuries. I mean, it's kind of weird how we're having trouble at these auctions, and here come these things called stable coins, and they buy a huge amount of treasuries. That worries me. I'm just telling you that gives me pause because of how much debt needs to be sold, and people just don't get it. They don't understand how bad it's going to be again next year, with how much more debt's got to be rolled over, and the year after that, and then on top of all the debt we add, right? It's just this problem that every year it just gets more vicious because we're adding $2 and $3 trillion on top of all of now all of a sudden there's another $2 trillion more that has to be rolled over, and now it's like, well, gosh, the Treasury auctions went up by $5 trillion, right? Instead of, they didn't just go up the 2 or 3, and this is kind of just, I'll throw it out. I did not know this, and I was kind of digging into it and was discovering, looking at the stable coins now. These are the ones that are tied to the U.S. dollar, stuff like that. That's what they're doing, Jason. They're buying treasuries, and lots of them.
I've seen where they're buying property with it too. They're going into certain coins and pumping it up. I mean, remember the Trump coin that came out, and all his supporters jumped into it, and then it crashed. I mean, it's scary what's looking like it's going at. To me, that was kind of a test, Joe. It was a test. Can we pump something, put it into something else real quick, and how does that work? And when you have a digital currency and you move it into something else, there's tax protections. There's all kinds of interesting stuff. You go from a digital coin and you put it into property. That's a trade. It's a transfer. It's a way for very, very wealthy, big money to move assets without having to pay taxes or deal with regulations. And some of the stuff that Trump is signing to make this easier, there's all kinds of regulations with executive orders being passed for making bribing foreign leaders and companies legal now to get. Right. Yeah. Have you seen this? And you've seen they're going to make money laundering.
That's a true story. Yes.
Yeah, money laundering is easier now too. So the money laundering thing that Trump passed as an executive order makes me think that this is going to be, hey, this is how we need to move we're going to pump up some digital assets, move it into property, gold, treasuries. And then when it goes flat, it doesn't matter. We'll pump up another one. We'll get people all excited, and they'll just keep sucking the wealth out of the bottom half, Joe, or the bottom 90% with these pump and dumps on digital currencies. It's really it's a weird world we're living in, man. Be careful with the stuff you don't know. That's why I like gold. Gold and silver's a rock. Physically got to own it, and the paper markets are showing that they're having trouble controlling the real value of it, and gold at 3,200 by Friday or next Monday, I think is very possible, Joe.
Well, one other thing, too. Wednesday, the deal for BlackRock to buy the ports is off. C.K. Hutchinson was the company that was going to be selling these ports. The Chinese have flipped out, and now C.K. Hutchinson is saying that they are not going to sign the deal. They're talking about, hey, we're going to have to extend this. We're not going to close. Is that going to affect? Is Trump going to throw more tariffs because of something like that? Another wild card. 800-951-0592. Rolls of Walker $50 at $2.70. Rolls of Mercury dimes at $1.35, and then $20 gold pieces, Liberties or St. Gaudens, $31.95 at 800-951-0592. If you're just joining us, gold at a new all-time record high, above 3,100, 3,120 and change. Silver just below 34 as everybody is waiting. Tomorrow we'll get some economic data tomorrow. We're also supposed to hear at some point tomorrow what the tariffs, the new tariffs are going to look like, that we are assuming will go into effect on Wednesday. And then, of course, Jason, later, all from Wednesday, Thursday, Friday, it's all going to be about tariffs and jobs for sure.
We'll see what happens. The Wednesday due date, I don't know if we'll see how much movement goes through the markets the next couple of days, Joe. I mean, yeah, the NASDAQ sure doesn't look too good. The NASDAQ's been having a lot of problems lately, as the other ones are struggling as well. But those tech stocks are really starting to bleed out a little bit. Let's see what happens. I think there's going to be a lot of selling off of things if this higher prices of everything happens. Like I said earlier in the show, if 50% of all the consumer spending is coming from the top 10% of wealth in this country, when they shut the spigot off, that's when you're going to see all this happen, Joe. You're going to see markets fall. You're going to see a lot of problems, and I think that's where all this tariffing and sanctioning and all this other stuff is coming from, Joe. Everybody is taking the chips off the table, and I guess the night is over. It's time to take see where you did on the gambling tables. You went to Las Vegas. You came back with half your money. You felt pretty good.
Right. Right. And, you know, I said, hey, I'm willing to lose $2,000. I came home with $1,000, and I felt like I won. Right. That's kind of what we're looking at. And I'll say it again. Inflation was never going away until the job losses come. Period. And that's still the problem. Now, the worry is the job losses are going to come, but because of terrorists and protectionism, sanctions, whatever it may be, inflation is going to be even more difficult, even with the job losses. I think that's the big fear.
Gold is telling us that. Gold is a leading indicator, and all it's been doing the last 15 months is showing us it's going to get worse. 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 Since I've been doing this show, I've never seen gold speaking louder about some emergency to come, and the huge amount that gold has moved, well over 50% now. What does that mean? What is really happening? I think there's those in the know. They know what's going to happen. And some of the behaviors by those in the know, the big club, they seem to be showing us that you better be ready because it's coming.
Yeah, I think lack of confidence is it's a nice word, right? They don't want you to worry too much. It's just a lack of confidence.
This is better than panic, right?
Yes, yeah. Well, usually what comes after lack of confidence? Panic.